ahead, and what do they feel about the IPOs that are hitting the market. Let's also hear out none other than Rashesh Shah, Chairman at Edelweiss Group, who is all set to divest 70% of stake in Edelweiss Kalakar Insurance Brokers. Last week, my colleague Ajay Sharma got a chance to speak to him on this deal.
So as you know, Ajay, Edelweiss, we are a diversified company with almost 10 different businesses, and this insurance broking business is very similar to investment banking, very similar to broking business. And it was earlier part of the wealth management business, which, as you know, we have spun off and we are getting it listed as a standalone business. And because here we had a partnership with Gallagher, they were keen to keep it as a standalone, and increasingly this is becoming a global business. They wanted to increase their stake and we got a good price. So I think we are reallocating capital, but I must remind you, we have two other insurance business. We have a life insurance business and a general insurance business, where collectively we have invested more than 2,500 crores up till now, and we continue to invest in that. So I think part of this is we are reallocating capital from insurance broking, which was a small, very high quality, very niche business. It is there. And since it was part of wealth management, after we spun off wealth management, this became a standalone business. So our board decided if there was a good partner, the business future is very bright, and we can also replow this capital into other growth areas that we have. So we have, after this sale, we still have 8 businesses. We have a housing finance business, NBFC, asset management, mutual fund, ARC, life insurance, general insurance, and wealth management. All these are very good businesses, and we continue to grow in that. As you know, last year our customer assets have grown by 35% in the last 1 year. So we are, as we have restructured and from one company with many divisions, we have now become many standalone separate companies, and each one has a very bright future and can take off on its own.
Right. So very important clarification. This is only the insurance broking business which is being sold off. As a manufacturer in other life in general, you stay there. You have also done a transaction in the wealth business a couple of months back. Very, PAG, one of the most reputed companies, have come in. Talk to us, how much capital have you raised together now, which is sitting on the books, and how would we be utilizing that? Because earlier you said that it is part of a capital allocation policy being reworked. So money coming from wealth, money coming from here, how is it all being utilized? And out of the bouquet of businesses which you have, what is the status on what kind of growth each of them are having right now?
So the total capital we have raised in these two transactions will be about close to 2,500 crores, 2,500 crore is the capital we would have raised. About half of that, about 1,400 goes into repaying debt. We had some holdco level debt that we had borrowed. We have now decided we're going to reduce the debt. So about 1,400 goes into reducing debt, and the
Well, we have 2 IPOs scheduled to